mic on. Cool. Love you, honey. Yeah, let me know. Okay. Hey, good morning. What's up? What's up? Hey, good morning. What's up? What's up? Hey, good morning. What's up? What's up? Hey, good morning. What's up? That was weird. What the heck? Bit of an echo. Yeah, hopefully it's fixed. I guess y'all will let me know. Should be gone by now. All good. Cool. Okay. Well, let's see what we get this morning. We'll kind of run through, right? We spoke yesterday, 4 hour quick. We said we wanted to see this fair value gap be traded up and through, right? We're bullish. We want to see higher prices. We don't expect that this run lower was the start of basically, right, the sell-off. We simply look at it as, let's go to this daily, right? If we look back, zoom out, any run lower has simply been to return into an inefficiency or to run out liquidity, right? That's all we've been doing since we created this low here. Pulling back into inefficiencies, running higher, right? Pulling back into inefficiencies, pulling back to pick up liquidity, running higher, pulling back into an inefficiency, running higher. So now we just expect that to continue. We're not trying to call tops out here, right? We pull back into the daily volume imbalance. We hold that. 4 hour itself held us, right? The 4 hour fair value gap here holds us. We spoke that we would probably leave a 4 hour fair value gap here that we would expect to hold. Lo and behold, that holds, gets us up and above. And right, we spoke about looking for this 4 hour fair value gap here, and now we've delivered perfectly into that high. So far, price is moving really as we would expect. I like the idea of continuing to run higher. Right, we're not trying to call the top quite yet, but we do have this now inefficiency. So on a 1 hour sense, right, new inefficiency, liquidity sitting there. I could see us wanting to return for that first. Right, so in the short term, especially because notice here, we've cleared the short term high, wicking into the 4 hour fair value gap high. Starting to break structure here now. So let's look at this 1 minute fair value gap. Or 1 hour, excuse me. Boom. 1 hour there. Cool. So if we go, let's see here. We've got a 15. Yeah, right. Short-term high cleared. Wick. Trying to get under that wick. New day opening gap and midnight level though. Okay, so a few kind of interesting areas of interest here. As we continue to work down these time frames, really no inefficiencies in here. 15-minute volume imbalance. Right, here's that 4 hour. So we've hit the 4 hour high. Broken structure, bouncing off the midnight. I don't know why this candle's like that. Huh, it's only on one chart though. Promo code for the membership. Unfortunately not this time, brother. It's already pretty cheap to be honest, but if you're unable to at this time, right, it'll be there for a little bit. So this is the 9:30 opening here. Okay, we're hitting off this midnight level. What I would look for is, right, we're outside of this 1 hour fair value gap. If we can get back above it, this is that 15-minute volume imbalance here. So if we can get above, right, the 1 hour fair value gap after holding this midnight level, clearing out this liquidity and these equal lows, I think we can possibly, right, see that 1 hour now act as a support area. That's if we can clear highs. Ideally, we close above the volume imbalance here. Right, we're currently working within this tiny 1 minute bearish. So in the short term, right, we can kind of use that as a little confirmation. I like that we've created that volume imbalance as we seemed wanting to be pushing up and through. So we'll see if that candle closes or if it, right, simply wicks. Pretty early, so we're just waiting for that. So already we've kind of left it open. Right, we leave the volume imbalance open. Didn't close above that high, notice. Right, simply wicking it. Previous day high here as well, so kind of playing around that old liquidity layer level. Still want to see us get above the actual volume imbalance. Right, if we do that, I like the idea of coming back up for these highs here. Yeah, NQ is already obviously way above. NQ going lower though, right? So a little interesting off the opening. Never really a fan of that, the decoupled opening with the indices. Have to be a little bit careful here. Right, what I mean by that is, okay, we've just closed above there. Let me show you NQ here, right? So as we have ran lower, we're starting to push higher here in ES. Look at what NQ is doing, right? We've already ran out a low. One thing to know is if we're going to run higher, if NQ starts actually pushing, right, ES will be the leader and should accelerate quicker than NQ. This would have to be a run on stops here in NQ, seek and destroy. Okay, so we'd want to see that continue, which would allow ES to expand. As we said, once we close above now this up close candle, low, high, lower, low, broken. Consecutive up close candles become the breaker. I like to refine it. Last up close candle technically. As we look at this now, okay, we're leaving the 1 hour fair value gap with the breaker. Look how this candle closes above. Very next candle, right, taps into not only the previous day high, but the breaker. And now we start to accelerate. We've now closed above the 15-minute volume imbalance. So I would expect that means, right, we want to continue for highs. Like we said, we're bullish. We want to see higher prices. So do we expect price to honestly just continue to run, potentially. If NQ gets going, then we're definitely about to run here in ES. Currently watching this now, right? This large 1 minute. Potential inversion now. So if these two areas. See if we close above that or not. Yeah, very decoupled here. Like we said, NQ moving lower again. Dollar also moving lower. Okay, so dollar NQ moving together. YM going higher. This is kind of where we don't really necessarily pay too much attention, I guess, to NQ. Completely moving separately than ES at the moment. But we have to remember, right? NQ is already a lot higher up than ES is. Like if I go to a 15 second or a 15 minute. In ES, we've just reached and kind of surpassed, right? Where basically the data high that was created with CPI here. Whereas in NQ, right, we did that yesterday. We passed that yesterday. We're kind of already at a much higher range, but notice, yeah, look at the difference here. This is almost looking like, right, dollar versus ES. But if I show you the dollar, right, dollar is moving along with NQ. So when I see something like that, that means to me, right, I just really don't put much weight into what NQ is doing. I don't really trade NQ anyway. So if it's moving like this, not giving us any really confluence, then I just don't pay attention to it. Right, if ES starts giving us basically breakdowns in structure, then we can look for ES to start selling off. But for the time being, I just like the idea of, yeah, seeing if we can't push. Did the 15 close? So notice, right, 15, we like to use the correlating time frames with the PD arrays. So this is a 15-minute volume imbalance. We really want to wait for that 15-minute candlestick to close to confirm whether or not we're going to want to use that as support. Because we can wick this, still hold on the 15-minute, right, and start breaking down now on that 1-minute structure. Yeah, decoupled opening means the likelihood of lower probability, higher resistance runs. Let's see, 5-minute KOB here paired with that 1 hour. Still like that area. We got about 7 minutes, so still quite some time for the 15 to close. We may get a situation where we start consolidating inside of this fair value gap until we get closer towards the closure of that 15-minute. Ideally, if we get above this fair value gap, we already have once, so we'd want to see this act as an inversion. Right, we've closed above it here. The only issue with something like this is that this volume imbalance, they're almost one and the same. Okay, so when I see a volume imbalance paired with the fair value gap, I almost need to see both be traded above. Right, that's why this candle stopped here in its tracks. Now, if we can actually clear that, that's a good sign for us. Right, and we should be able to start releasing towards first, right, inner range liquidity, and then finally external range. As we say, external range does not need to be hit to be profitable. That's best case scenario. What we would not want to see is this candle wick this volume imbalance and close back underneath. So it almost tried to. We did get that closure above. That's really all I need to see. Now I want to see if we end up leaving a fair value gap in here as we leave this 1 minute. That would be a pretty good signature. If not, okay, so we don't. Instead, we go back to this candle's high. So seeing something like that, I would actually prefer the immediate rebalance. Tap this candle's high. Want to see if this candle can't still close actually above the volume imbalance. Okay, we've opened with a bearish, so that's not ideal. One way that we can kind of negate this is if this candlestick here can hold the volume imbalance and actually close slightly up higher, right, from where that volume imbalance started. If not, then as we said, I think we may just enter a slight consolidation within this area here. So we held it, but that one, once again, right? Another bearish volume imbalance. We want to see these being negated. We don't want to see bearish volume imbalances remain open. So in this case, would prefer this candle, right? Ideally closes above this down close candle here, but at least closes back above the volume imbalance. If this candle can push without any wick lower, that's also a good sign, right? So that kind of negated, fully bearish volume imbalance, no wick lower. But so far that, yeah, that volume imbalance here, giving us some hesitation. Okay. So I like that, right? Still holding the volume imbalance here. I like that. After closing above, we get to close below. This candle's open below, but the closure is what's important, right? We close back above it. Next candle opens as well. So I'd like to see continued pushes into first interrange liquidity here. We also have interrange liquidity here. Equal highs again, right? One set of equal highs, another set of equal highs. These equal highs align perfectly with the 4-hour consequent encroachment. Look at that, right? That'd be a good area to look for. Might be high resistance getting up there. We'll see. NQ still just going lower. Got tapped in at previous day high, but only partial. Oh, that is tough. What the heck? Might get another tap, honestly, though. Right, I'm still really, I think we might play till this 15. And at that point, right, we'll see. So we have 2.5 minutes, basically. We'll see what these next two candlesticks do. Short-term high being cleared. Right, I don't like that volume imbalance there. Yeah, if we start running, you might have to use your stop as the partial mechanic. That's what we do sometimes. So this here, I'm not a fan of at all, okay? The volume imbalance that can't even get back into this candlestick. That makes me a little nervous. So what I would need to see here is for this candle to actually... Yeah, we need to get back above that. I went long here at this volume imbalance, okay? I actually just closed some of it here within this. Because this, in my mind, may be an opposing PD array that actually, right, sends us through these lows. I got in like this. First entry here, consequent encroachment. Second entry here, volume imbalance. Okay. Partialed out one here now inside the volume imbalance. Stops are basically break even. So no risk. But right, we're moving pretty ugly. As we said, I think we may kind of time to store it here until that 15-minute candlestick closes in the next 30 seconds, which should give us a better indication. If we close underneath this volume imbalance here, right, that is kind of not what we would want to see, because now the 15-minute will hold that, which means that we may start running lower again. Yep, exactly. Okay. Kind of as we expected, right? We were waiting for that 15-minute candlestick. That's what this all in here is waiting for. And now we've confirmed. Wait for it. Don't want to call it too early. Okay, so we're under that. So now this is where we get interesting. Just like the chop, I'm out. Hell yeah, smart. Now, if you see something you don't like I've always said, quick to preserve capital, slow to execute anyways. So we're back into this breaker, okay? Into the original framework, which that can still hold us. So the idea of going higher is not out of the question at all. We overtake that again. Okay, so at this point, let's see if we can't overtake this here again. As we said, right, this here running into stops into a discount. We could still hold this. I went long again on this volume imbalance. Stop underneath the swing point. Still same objective, okay? Not thrown off sides, right? This, as I'm saying, this simply is a run on stops. This candle completely running back up above the volume imbalance to me indicates we want to resume bullishness, that this was just that, right? A run on stops. So I'm going back in. Good entry, got in at 40.23.5 here. So actually right on the volume imbalance. It's nice. Stop loss at this point right underneath old daily low. Basically 1.5 handles. 5 handles for us would be buy side here. I was only able to add 1. This is where it gets interesting because, right, same scenario you just ran into. Wanted to add more, only got 1 tapped in. So it's, do we want a partial here at this high or do we want to hold it? I would favor NQ starting to rally a little bit. I think we want to go for highs here. So what I'll do is I'll kind of bite the bullet. We're going to go full pull into here, but we're going to use the stop loss almost as our partialing mechanic, okay? So as we run this first buy side here, stop will get moved. We'll watch this fair value gap here now. See what we get within that. Ideally, right, we respect this, push higher. You're using a 2-minute inversion to anticipate. That's a good one too. Right, 2 minutes nice. I like the 2-minute as well. All right, let's see what we get. Yeah, NQ being an absolute just whack. Dow Jones off to the races. Interesting. So now, right, inversion here. Wouldn't really even want to see lower than consequent encroachment now of this inversion, because we've already gone underneath it once and we've gone back above it. So this inversion, in my mind, balanced, should be. Which means if we are bullish, don't really need to return any lower than its consequent encroachment. Ideally, not even any lower than the high of it. So far, this fair value gap seems to be holding, so we'll see if we can't continue to respect that. Push us into the buy side here. I got long again here. Okay, so we'll just share this so it's easier to kind of explain it as we go. Okay, so right there, we're gonna partial here at this high, okay? If we can get there. Because we've ran this buy side now, we go here. We have to go tight stop. Because I want to see this high, but if we don't want to get there, right, if we kind of run this high only in reverse, that's a 5 handle partial. Actually, I'll put it right at 5, right? Don't need to be greedy. So first partial comes at 5, which is right before this buy side here, which will work out beautifully, right? Consequent encroachment of the 4 hour. So multiple things drawing price into that. That'll be first partial. I like external range for final target. As you saw, first entry here, second entry on the volume imbalance. I close one as we get into this opposing volume imbalance. I get stopped out because my stop's in profit here on this down close candle. Very next candle overtakes the original volume imbalance. Boom, I go right back in, zero hesitation. We push up higher, boom, add again a stacked position. But now because we've ran that and we've partialed, right, there's zero need to have any risk in the market. So we go stop to break even. We now go 1 here. So now if we get stopped, we care less. Okay, we've already secured majority of the position. Look at the exit. This is why I put it 1 tick below, because those have been around a while. You've seen, right, I tend to hit the high quite often, and that upsets me. So instead of being greedy and missing the exit, we go 1 tick lower and get out at the swing high after entering on the swing low. Swing low entry as well. It's like here now, right? If I don't even get this final target, oh well. We've already secured us a profit. And that's why partials always pay, at least for me, right? I'll always advise partials. Because now imagine you're in these trades, right? Price moves, falls short of your final target, and now you get stopped without securing anything, without paying yourself, right? All of this in here was a waste. Whereas for us, we already secured partials here, and now we secure more partials here. So without even having to hit any targets in the morning, we're already up twice, right? And that's just the beauty of low-hanging fruit targets and partialing when you have the chance. So now we can see, let's see what we want to do here. Still not convinced that we're going to start breaking lower. We're in just a high resistance liquidity run. Okay, so it's going to be a lot of give and take, a lot of back and forth. For me to start looking for lower prices, we really need to break below this fair value gap, leaving behind a new discount. So let's watch for that next. Is your minimum 5 handles? Yes. Right, I tend to aim usually for 5 handles, but the minimum will definitely be, right, 5 handles. Sometimes if we can get more, we'll do that. Like we'll squeeze it out here, right, if it aligns with obvious PD arrays. But if not, then yeah, 5 handles at least is what we need. So now we may get an actual low liquidity run straight into this low. Okay, after hitting buy side here, equal highs here, anyone that's long, like us, that didn't already partial out, we're gonna punish those guys, right? Stops taken. Now I'm looking here. 1 hour needs to hold us. More importantly, the 1 minute volume imbalance here within the 1 hour needs to hold us. But already Watch this as a volume imbalance entry. Okay, we tap that. The tap and go potentially into the low. If not, we can get higher again, but we may want to actually run for that. Right, high, low, higher, high, broken, breaker here. Breaker aligned with volume imbalance perfectly. Whoa. And Q, absolute shit in the bed. So now we may get a situation where, where's the dollar? Nope, dollar, we're going lower too. Okay, I take it back. I was like, we may get a situation where ES starts to catch up to NQ, but with the dollar selling off, I think NQ is lost today. NQ's doing its own shit today, so we'll let it play. NQ is independent. Okay, no volume imbalance entry, right? So for those that know how that works, if you try to enter on the volume imbalance and it closes, automatically close the position. Easy mechanical strategy there. What I'm looking at now though, bearish fair value gap, okay? Still inside of the bearish breaker, but now inversion volume imbalance, 15, original. Because notice what we have done here, right? The 15 has not closed above. So even though we were able to participate on this, in my mind, we're not confirmed that we want to go higher yet, because the 15 has yet to hit this. I mean, look at the bodies. They're not even getting near that. So now this is where I would look to short from, right? If we're going short, it's here. Using the inversion, 15 higher time frame. Tough though, because we're really in between two higher time frame PD arrays at the moment. Let me clear this. I don't really want this either. Right, the 15-minute volume imbalance and the 1 hour fair value gap. If I had to choose, seeing as how we're reacting here, I think that we want to get through this 1 hour fair value gap and actually gravitate towards this low. We may not even get into the low, but I feel like we'll want to gravitate towards that level. You'll see right now volume imbalance here offering support. If that gives way, especially after right entry here inside the bearish fair value gap with the original volume imbalance, if we can close underneath this, right, that's almost a guaranteed look into the low of that 1 hour fair value gap. Holding it strong though. Right, so this is kind of the same scenario where we've cleared stops. This could be a potential pretty good inversion play here, right? If this volume imbalance holds us and the 1 hour fair value gap here holds us, right, we're still within the bullish breaker. So now we still have discounts here, and we often speak of, right, this is the original 930 creation. That original setup can hold multiple times throughout the morning. So we don't want to go in here thinking, all right, right, one and done type of thing. So for me, if we hold to all these discounts, right, breaker, 1 hour fair value gap, really YouTube model as well, inversion here, a lot of discounts. If we hold that, accelerate back up and through this bearish fair value gap, I like that as another longing opportunity. Right, because now we've picked up liquidity, we've held at a discount, we've taken over and surpassed the last premium. We often speak of that's a good way to indicate order flow, and we'll be getting back above previous day high. So that's all reliant on us closing above, right? We're not trying to just go in now anticipating it. We need to wait and see. But if it does, I like the idea of something like that, right? Because what do we have here? Equal highs now, 3. That's not random. I think we'll want to revisit that at a later time. Clear up some of the mess. Don't really need this anymore. New buy side is here. So we'll see who wins here. Do we want to go bearish or bullish? No problem, Winston. Hope it's helpful some way. Figure I might as well talk out loud. Talk out the thought process. It's the best way to learn. Or at least see what I'm thinking. Yeah, divergence is crazy. Right, that's why we have to be very nimble here. So in days like this, and those that have been around, right, when we're really decoupled and we're relying solely on price action, that's why I'm a lot more nimble and quick, right, with entries and exits. Quicker to kind of close positions if I see something I don't like, slower to enter. Obviously, it still works, right? We're still up. But you really have to be precise here. So I definitely recommend. It's not for everybody trying to trade in this type of environment. But now, okay, right, that's what we were looking for there. We hold first, right? I especially like when we kind of respect it initially, like this. Because now, if we can overtake that, 15-minute, once again, 15-minute trying again, third try. So still technically, right, we're gonna have to wait a few minutes until the 15-minute closes to really confirm that idea, but in the short term, we could possibly use this once again. Because we already had 2 winners, we'll go paper here. Whoa, I'm in a trade, right? What the heck? Huh. What? We closed above. We'll try this. Paper entry, okay, don't do it. High risk. That's why I'm papering it. This is more of an anticipation entry. Because as I said, the 15 has yet to close. So we could easily hold this bearish. What I'm trying to do is get in on a short-term run with a 1 minute, utilizing that as support. Even into, right, like let's go. Honestly, I'll probably partial out here at the high of this fair value gap. An opposing premium. Right, so we're using really the volume imbalance for the entry here. Volume imbalance entry. Best case scenario, this volume imbalance stays open. Like this. It does, okay. So seeing that, I like that. Best case scenario, right, volume imbalance has remained open. We can go stop underneath previous day high. We need to get through this fair value gap here. Another volume imbalance, ideal. What we'll do is right there. So at this volume imbalance that's aligned with consequent encroachment of this original inversion, we'll just add 2 more. So building kind of the full position there. Now we're done. 2 handle stop, pretty typical, right? As you see, I like going for 5 handles, which would take us here into the rejection block potentially. This area. What the? That's not the right thing. If we close above this now, potential another entry. What's that? Back to back to back volume imbalances. I like that. Bearish fair value gap here though. Okay, that's gonna be the one area of hesitation. We're inside of it. If we're gonna go bearish and basically attack our stop, it's gonna be from here. Straight for it. All right, that's fine. So quick into our stop, right? As we said, not surprising. Bearish fair value gap here. If we're going to enter an area of consolidation, right? If we're going to enter a choppy market, external ranges at this point aren't getting hit. So we're fine with that. Pure paper. And that's why we love it. All right, we're not giving back profits. But I actually might take that short legit. Where are we at with? I like that actually. Let's see, it's 2.5. 5 handles would need to get us into the short-term low. I want to go short here, but really just debating if I want to wait for confirmation. What I'll do is I want to short this, okay? I'm going to wait and see if this fair value gap here gets left open. Turn these off for now. If we leave a fair value gap there, we don't, okay? Wait, unless there's one right there. There is, okay. So this still higher risk in my opinion, right? We're obviously in a choppy market. So I'm going to go in very low risk because it's just lower probability, high resistance. As I look at this, however, kind of clear this even, right? So far, more damage in my mind since we've opened has been buy side, right? We've cleared these highs and this high, created equal highs, ran those, created a short-term high, ran that high, created one more short-term high, ran that high as we cleared these highs. But now opposing, we've actually cleared lows. Okay. So we're actually at a spot right now where, and right, I have no shame admitting, I just don't really have any hard bias. We've already secured profits on the day, reaching into our original target here. We've retraced, kind of broken back underneath, right, a 15-minute that should have held us. So when I see us going back and forth through higher time frame PD arrays, that leads me to believe that we're going to be choppy. So I like the idea of going short from here, but I actually won't execute on it. Okay, we'll just read it. Because even though we can see things, right, the underlying market conditions at this moment, I'm not a fan of, so I don't want to risk live capital. No need. Especially after making profits this morning. So at this point, we'll probably just watch. Right, and good thing, because that looks like it's going to take us out. And this is where you get chopped up, right? Say you're trying to go short here or long, either way, and we're going back and forth. That's where the choppiness comes from. What happened in NASDAQ? NQ said goodbye. I told you, NQ's just doing its own shit today. NQ's like, nah. We on our own. Right, look at that. Relative to ES, I mean, this is the original 930 low. Look how much farther we are below that. NQ has moved 80 handles lower. Whereas ES, from that same low, has actually moved 9 handles higher. So if that's not a discrepancy, I don't know what is. While at the same time, right, dollar, what? Attacking a low. So we're all over the place here. Which is another reason why, right, we're being very nimble. Decoupled markets, not moving in sync. Thursday. A lot going on. Go back to ES though. Yeah, look at that's ugly. Okay, let's go back to higher time frames. So seeing something like this, okay. Honestly, I would not do anything until this next 15-minute candlestick closes. Because I really want confirmation that this volume imbalance here is going to offer us support. Like we could almost go long. Like if we want to be aggressive, we go long here. Above this fair value gap again. So we'll tape read that. But for me, right, for me feeling comfortable truly entering into a position at this point, I need higher time frame backing. We've already shown twice an unwillingness to actually close above this volume imbalance. So if the 15-minute actually does close above, that should set off an easy kind of run into buy side. The only thing we have to be kind of, right, not necessarily worried, but we could get a situation where we run for that buy side in this one 15-minute stick or 15-minute candlestick. Right, to where if we did that, we'd actually wouldn't have an opportunity to enter because this whole candle will push straight into that. I don't necessarily see that happening though. I think we give at least one opportunity, right? With just how we've been moving. I think that if we wait for that 15-minute to confirm that bullishness, that we'll get at least one retracement. So ideally, right, we actually, so let's kind of clear this up. What we would want to see here is for this fair value gap to actually hold us for the next 5 minutes. Hold us for a little bit. We can create some consolidation. If anything, it'd be nice to kind of maybe create short-term lows within here. Right, let the 15-minute candlestick close, then retrace into here where we could enter to then go for, right, the highs. That's what I would want to see. If we straight push, then we're still right, but we just miss a trade, right? And that's fine. We're going to miss entries. As long as I'm on sides, as long as we can see what's coming, I'll never be upset about missing an entry. Because there's always going to be another entry. Right, having the draw on liquidity is much more important than the entry itself. I almost went along that right there, though, brother. That's enticing. Like, we might scratch the itch and go in again on a paper. Because now that NQ's picking up some steam, I mean, ES should just go. We'll see if we get a tap into this. Especially if we leave. If we leave a fair value gap here, we use that for entry. Boom. All right. It's left. Entry there. Tight stop. Like this. But now we need external range plus some. Right there for exit. Okay. I like that there. Like, because at this point, right, we could be wrong, obviously. But like I said, if we continue to overtake fair value gaps and then overtake them in the opposing direction, right, not really respecting PD arrays, that to me is a clear-cut sign of low probability, high resistance conditions, which is why we're in the safety of the paper trading account. Because as I said, 15-minute has yet to close. I don't feel comfortable doing anything until this confirms, right? We're disregarding this PD array. At that point, then we could be a little bit, or have some more conviction behind the trade idea. But until that point, we're simply trading the patterns themselves, right? And that is just another form of retail trading, to be honest. Purely trading the concepts, right? The patterns that form, just another form of retail. So we'd want that to hold. If we close above this fair value gap, we'd need to expand quickly. We don't. We close right on the high of it. Still want to see that expansion. Right. And right, another signature of high resistance liquidity runs is even if we're right, look at how much time, right, has been spent inside of this fair value gap. Not only that, look how much we were priced into it. Right, so when we're in choppy conditions, fair value gaps are going to be fully repriced into, like this. Right, whereas if we are in a market that's predisposed to move quickly, more than likely, right, consequent encroachments, all that ever really gets revisited. So if we're completely repricing into fair value gaps before moving away, that's another good indication that order flow in itself, right, just a little lackluster. To where ideas can still be right, I expect this to be the draw on liquidity. So that idea still will hold up, but getting there is going to be rather slow. Right, and I'm just not a fan of that. I like being in and out quickly. That's all right. We'll let this play out. So we've closed above this. So now I almost want to go in again, right, to test that theory. If we fully repriced into and closing above a fair value gap, that should be balanced. So fuck it, we'll just throw in, right, another 2 entries right there. Just adding in the logical area that should support price if we are on side. If we're off sides, obviously we stopped. But if we're on sides, this holds us. We accelerate into buy side here and here. Because I'm usually a 5-handle guy, right, we'll go 5 handles for exit, but I almost want a partial. Nah. 2.5 handles, that's goofy. Oh, we'll throw these back up for now. We run this buy side, stop gets jammed right underneath the fair value gap. We run this high, stop goes break even. Kissed it. Another equal high. Why are we hesitating there? Don't forget, it's not only a high, it's consequent encroachment of the 4-hour fair value gap. Okay, higher time frame, key level. We'll run through it. Yeah, we'll run through that. Diamond hands, brother. Right, these are them high resistance liquidity runs. This is why we don't want to be a part of them, because they give and take so much. What you should have done is what I did, brother. You go 1 tick, come on. Instead of X thing right there, 1 tick lower. Boom, you're out. How dare you? 1 tick below. NB. NB, you're god dang it. No, I know who you are. I get confused with your YouTube names. No, you gotta remind me. Once you say it, I'm gonna be pissed. Brisket. That's my guess. Ah, yeah, okay. See, I knew it. Just had to remember. So look, another opportunity to enter. I didn't, but we could have. Why? Because the buy side had yet to be cleared. Discount still active. Right, giving people one more chance to try to enter there. So boom, we run through the high, stop, squeezed underneath. Let's run straight through external, which actually external range will take off majority. Just cause, right? We'll do that, and then we'll let that final one be for the new day opening gap here if we want to get up there. And what did I say? We go 1 tick underneath. Boom. There it is. Practice what you preach. And that's why. Oh my God, that kills me. Look at that. All right. When you understand the conditions, you understand what needs to be done. And I mean, hello. That's twice. This exit and this exit. Catching the absolute swing high. But now that we've partialed majority, okay, we can actually go like this. So this fair value gap shouldn't be breached, but that stop out will still be paid for by right here, this profit. So we'll eat a little bit into the profits, but that's fine to allow for one more tap of this here. Because now we have equal highs here. So in my mind, we're still not done yet. Low, high, lower, low. Potential breaker. So I like that, right? We'll leave this here. Remember, we're in a high resistance liquidity run, so it's going to be a lot of give and take. In these types of scenarios, you need to be a little bit more comfortable leaving your stop where it is. Right, and you've seen me at times where I'll definitely be jamming stops tightly as we're moving, but that's in a very, we'll say bullish or bearish, just a market that's very moving in one direction. Whereas in here, because we canned whipsaw so many times, right, it needs to be under basically my last line of defense, and that's this fair value gap here. To be honest, 1, 2, 3 swing lows, I can actually go here. So now we're basically risk-free, lines portion secured. If we hold this volume imbalance here and this candle closes above, stop will actually get put under this candle here. Right, this down close candle. Down close candles support price in bullish order flow. So we will put it under that. If we get stopped, that's fine too. You're right, trailing stops too aggressively in these conditions. Yeah, it can really piss you off. And I only know that, right, because I've done it many times and I've forgotten not to do it plenty of times as well. Hey, as I say, you got to forget something at least, what, 20 times before you truly remember it. So there'd be so many times where I'd be trying to jam my stop just to get stopped out. Whereas now, we let it rock. And to be honest, whatever happens here will probably be the end, okay? Just because now all of my objectives have been met. And I'm not someone that necessarily just likes to sit around and watch for the fun of it, because I think that can create bad habits personally. Right? If you're kind of sitting here without really any intention. I guess if you're learning, you need to do that. So I take it back. That was kind of privileged of me to say. But yeah, I think we're done here, honestly. Because even though, right, once again, like we said, we get to our target, it's high resistance. And I mean, hello, look at the exit. We did it again, right? The high. Swing low to swing high. And yeah, I think we're content with that, honestly. What time is it? 10:22. We'll hang out for another 8 minutes. I'll wait till 10:30. Just want to see what the morning range gets put into place. If we leave this high in place by 10:30, then I think we kind of stay within this range, right? But we shall see. Honestly, no. Like for me, right, I don't... Silver bullet needs to be in markets that are in sync. Right, and obviously these are not in sync at all. And it has to have an obvious draw on liquidity, right? No really obvious draw on liquidity. Price hasn't moved. I mean, yeah, I wouldn't necessarily look for that silver bullet short. If anything, we're just going to keep going higher. Right, because now we have equal highs here. So just as we said on a daily chart, right? We don't want to get thrown out. We're not, oh geez. Try some of those. We're not getting shaken out. Any run lower, I see simply as a run on stops or a returning to an inefficiency before we pump. Right, so as we look at this daily chart, even if I zoomed in, right, you can see that. Pullbacks before pump ups. Well, now if I zoom into a 1 minute, right, kind of the same thing. Pullbacks before the pump up, pull back to run out stops before the pump up, pull back into inefficiency before the pump up. So this to me, pull back to run out a short-term low into pre-existing, right? Not only inversion, but volume imbalance. Bam. So now what we can try, actually we'll try this. I should have bought right there. But if we tap this fair value gap again, we buy that. Missed it though, because I probably should have added here. But we'll see. Yeah, okay. That's fine. If we leave this fair value gap, we'll try that. Final target being new day opening gap. But I think that this volume imbalance here is going to be the catalyst to support us into that new day opening gap. So we may have missed this entry. That's fine though. Yeah, we're missing that. We are missing it. Yeah, still bullish, right? Like we said, 1 hour discount. Any discounts should hold us, really. Like the 1 hour that we drew out, right? That's what you guys are talking about here. I'm guessing. This one. We're not gonna get injured. We're not gonna get injured. Entry was there. Second entry is here. Once this candlestick taps this candle's close, that'd be an entry. That'd be the volume imbalance entry more specifically. And right, that is taking advantage of the fact that we're going to be in a predisposed market that wants to go higher, so volume imbalances remain open. Which means if we don't even, okay, we don't even get into there. And another volume imbalance. Yeah, watch that for entry. Could almost go like this. This would be expecting that this fair value gap, however, becomes a breakaway gap. Which would make sense. 2 minute sense, right? There's nothing there. 5 minute sense, there's nothing there. It's only on the 1 minute. So I could see us actually holding this. Let's try this. We'll go here. This will be the final. We'd actually want to see this be a breakaway gap now. So hold either at this or at this one. Leave this fair value gap. Run for the high. Actually, okay, user error. I shouldn't have done that. I didn't pick up this here. Okay, we've actually cleared this external range. So that was not a good idea. Personally, for me, when we do things like that, if we're hitting an external range, I don't like to be in the trade. Right, and those that have been around for some time know that, so I just close it. But I like entering trades when we haven't hit, right, external ranges before. I like being in the middle of a move as we move towards, right, the liquidity. I'm not someone that likes to try to catch reversals or continuations, really. So once we've hit that liquidity, I just go to the sidelines and then we wait and see what happens at that point. I think we could still hold this, though. Because it was a pretty shallow run. We'll see, though. Cool. Yeah. Good thing we closed it when we did. Right, we understand that we're offsides immediately. That was just a lapse of focus there. We had cleared the buy side. Okay. So after clearing, yeah, we'll be done, actually. This more than likely is going to be the morning range high. Okay, so from 9:30 to 10:30. We look at lowest low. Here, technically lowest swing low would be here to the lowest high here. I wonder if we wick that volume imbalance. $9:30 about to come. Okay. All right, 10:30 here now. Potential breaker here. Oh, playing here. Okay. I'm content here. We'll go. I like the idea of, let's see what we do with this form and bounce real quick. Actually just threw one, okay? One contract in. So this will be the final. That was, wow, lucky actually. So got in just before it sold off. So I'm short here. 5 handles. Takes us to the low of the 1 hour. We'll see if we can get there. So we'll let that hold, and then at that point, we'll dip. All right, so here, we're here now. We're gonna go like this. Less than a 2-handle stop. Because this 1 hour, right, we've been using it as support so many times, I don't know if we'll get through that low, to be honest. So that's why I just went in with 1 to try to get that run lower, right? Tight stop, very minuscule risk. That candle's closed below the previous day low. Breakers here. Wouldn't even want to see that consequent encroachment. We'll leave it like this. Let's get through that, baby. Need to get underneath that. Right, this has really been the hindrance here. Been holding us. Under that, we should be good. In fact, under that, we go break even. Let's get a close. Let's get a close. No closure. Not a fan. Right, once again, we've left this open, however. So to me, I want that to hold. I don't want this high here breached. But we're in terribly choppy conditions. Do I allow my stop to breathe or no? Low, high, lower, low. Okay, breaker there. Stop above. Okay. What I will do is if we hold this once, if we show one opportunity, one willingness by candle to hold that, I'll actually go ahead and move the stop. Best case scenario, right? If we close into that, stop will get pushed to break even anyway. Let's go. All right, so we'll go in here. Dun-dun-dun. Are you tapering till 11? No, probably a little less than that. Oh, we're just short of that. Boom, baby. All right. Well, beautiful. I mean, that's, come on, swing. No, I missed the swing high. That pisses me off. How do I not get the swing high? We'll get the swing low at least, but damn. Sell side at 50.16. Yeah. I don't know. I don't think we get there though, right? That's external range. I don't think we get external range. Why not short at premium fair value gap? That is a premium fair value gap, okay? You're thinking we need a short here. That's not the case, okay? We just ran this high, so we need to think. If we've just cleared this buy side, who is now the opposing target, right? It's the people that went long into that, just like we said here. As we long dip into this, right? This quick movement was to punish anyone. So it's the same exact thing the market repeats. people then, right? People went long here, I'm sure. Went long up into buy side. People that did not either take profits, right, or did not move stops, that's what this run is doing. It's returning to run out all of these stops. So when we understand that, right, price is in a hurry for stops, we are not going to return into deeper premiums. Instead, the most recent fair value gap formed will hold us. Why did I know this one would hold us? Well, high to a low to a higher high that gets broken with displacement. All right, so this down close candle here becomes the breaker, and I refine it to the wick. So now I see, okay, well, we have the breaker. We have the original 1 minute fair value gap here, and we've closed underneath consequent encroachment. That is an early indication that we're going to want to use that now as resistance to send us lower. So not only have we closed underneath consequent encroachment of this, let me move this, sorry, right, of this original 1 minute, we've now left behind a bearish fair value gap aligned with it, and we have the breaker, right? That's a unicorn setup. So very easy to see that, right? This is why I went in. When we have something like this, like I said, it's the middle of the range into, right, liquidity. Those are the moves that I like the best because we've already established the direction. We've created the breaker. We have cleared the buy side. The only thing left to do is attack the sell side. We leave behind a premium fair value gap aligned with the breaker and the consequent encroachment. We take that short beautifully, and now we exit on, once again, the swing low. So, yeah. I hope that makes sense to you, brother. If not, let me know how I could, or if you need more information or something. If you have another question like that. But for us, now that'll be a day. Beautiful day, to be honest. And still didn't close below, right? And that's why I'm not aiming for move. I'm not aiming for this low. Because price has really been showing an unwillingness to run external ranges, right? We did do this one, but see how high resistance it was? So when I see this move, right, I'm not thinking, oh, we're about to run out this low. No. I'm thinking, oh, we're just going to return into an inefficiency and clear out the internal range liquidity. Boom. I mean, that's just beautiful. Legitimately catching the lowest low that you could catch in this swing. This is stupid. We should have caught the swing high, but we had to run that high out one more time. So, a little sloppy there for that entry. Probably could have waited to get, yeah, if I would have waited for the actual breaker. So, all right, that's all right. Learning experience, right? If I wait for the breaker, then I catch the swing high where I want to get in at instead of using the fair value gap. Can't be perfect all the time. What mentorship should I watch to know that? Let's see. I would say 2022 probably. I mean, something like this is going to be tough because this is more experience based, right? And I hate to say that because that's such a cop-out answer, but I'll be completely honest. Like 8 months ago, I would have tried to enter here at this fair value gap, right? And I would have been just as confused, just like you. Well, why didn't we come back up into this fair value gap? Well, now I understand, right? There's more than just the patterns themselves, narrative. So kind of everything I've already explained led me to understand that the most recent fair value gap here is what would be used. And that really comes from just, right, watching the videos time after time again. If I'm being completely honest, I would say it primarily comes from the spaces. There was so much information that was released in those spaces, right? That is almost, I wouldn't say if it's necessary, but it lays such a strong foundation. And it adds to the actual concepts that he's already taught. Yeah, we're good there. We are content with enough. So if there's no more questions or anything, I think we'll go ahead and wrap it up. Yeah, the spaces, brother, I mean, right, that's what separates those that can do this for real and those that struggle, in my opinion, is those spaces, right? You can't half-ass something like this when trying to learn. And I think he did it on purpose, if I'm being completely honest. Just knowing the way Michael acts, I could see him purposely withholding information just to see, right, who's legitimate and who's in it for the quick buck. That's why he'd be ranting so much. There's a Spotify playlist that has spaces. Oh, there we go. See, that would be perfect then. Yeah, I almost treated that as like a supplementary teaching. So we'd watch, right? I'd watch all the YouTube videos and then I'd watch every space. Listen to the spaces in the gym. Ooh, I like that. Because there's some he'd be getting riled up. That's a good little... You'd be hitting PRs to Michael just yelling in the phone. Honestly, I kind of miss it, man. Those that went around in the heyday of his Twitter. Oh my. You miss so much. But he would go berserk on the spaces. He'd be yelling so loud the phone would be cutting out. She would crack me up. Looks like the range on it. So honestly for me, right, let's see, 5 minute. I don't know. Like I have no bias. We're working within the range. When we work within the range, I hold no bias. I simply work with what I'm given. Right, we could go low for this low again. We could run higher and attack inefficiencies. So to me, I don't have a bias. And I'm fine saying that because you're not always going to know. When I do know, I execute and it plays out. Right, when I don't know, I just sit here and watch. Right now is a situation where I don't necessarily think that we're going to want to run out this low. Right, so thinking that makes me think that we want to sit within this range here near the previous day high. Right, and I mean, if we kind of look at this, we're just in this range here. Right, we're not really going anywhere. So to me, I don't hold any bias. We were able to profit on the small range this morning. Right now I'm content. I'm going to leave. I'm going to close off the charts the rest of the day. I'm not going to watch. And I'm going to enjoy the Thursday. Right, sometimes you just got to let price bullshit its way around. And especially, right, I'm not in here trying to give any really hard signal because, right, NQ and the dollar, like nothing is really in sync. So seeing that, especially as we're about to close out the week, right, I'd rather just let the week close out however it's going to do, let price play out, and then come in next week with a new expectation. If I absolutely had to, right, gun to my head, old Michael style, if I had to pick between this low here and this high here being ran, we had to pick one, I would lean towards, what would I lean towards? Oh my God, I really cannot tell y'all. That's how I know, for me anyways, right, it's sidelines time. Because I really could not tell you which one I think would get hit first. If we're going off price action itself, okay, well, we look at this. We've cleared the equal highs. We've cleared external range here pretty shallowly. We've ran now to clear out internal range, but we have not cleared external range, right? So this high here to this low was our original range that we were within for the morning. So if I was to clear all this nonsense here, highest high, oops, down to this low was our dealing range, right? Because this high cleared buy side, this low cleared sell side. We ran out the high of that range. We're now back at equilibrium. Right, pull up to 50%. Look at that, right? We're hitting equilibrium. Based purely off of the range alone, I would say this low. Just because we've already ran the high of the range and we reverted back underneath equilibrium of it. So if I see that right, then that would lead me to believe that we're going to want to now go from the equilibrium of that range into the low of it. And that's what I would look for. But take that with an absolute grain of salt, because, yeah, we're at a place where I just don't know. Do you still try and keep learning ICT? Well, I mean, that's kind of a caveat, because of course you always want to keep learning, but I'm at a point where I don't need to learn anymore, right? That sounds arrogant to say, but I mean, I would even say it for certain like students. Like, you don't want to just keep on trying to learn every single concept or every single thing he says, right? That's information overload. It's going to cause you more harm than good. I've gotten to a point to where I've spent so much time, right? Well over my 10,000 hours of video watching and listening to him, that I've almost internalized everything that he has spoken, right? I see the market almost as he does. So it's not necessarily a point of me having to go in and learn, right? Or watch videos and figure out how to read the market. It's more about now refining my narrative and making sure that my draw and liquidity is correct. Because to be honest, that's the only thing I worry about. The entries, right? I'll be able to find any entry using any PD array at this point in time, right? I could use fair value gaps, volume imbalances, breakers. So the PD arrays for entry is not the worry. It's the draw and liquidity that really is all I care about. Because I know if I have the draw right, if I know where price is going to go, there will be a plethora of entries that I can take on the way there. If NQ is going to run clear buy side, ES should want to try to run buy side. Not necessarily. I mean, you saw this morning, right? Look at the discrepancy here. NQ ran all of its sell side. ES, didn't really want to do that. Right, so just because NQ starts going up, it doesn't necessarily mean ES will. It could, but it's not, right? It shouldn't be a black and white thing. ICT mentioned himself, we're supposed to pick a PD array and study ourselves. Yeah, definitely. Right? That's best case scenario. And that's what I did. I spent one PD array. I learned the ins and outs of it. I got very proficient, almost mastering it in a way. And then I moved to the next one. Right? And it wasn't until I got very proficient and was able to master that PD array that I moved to the next one. So I wasn't trying to learn, right, breakers and fair value gaps and order blocks and volume imbalances all at the same time. No. It was learn everything I can about order blocks, learn everything I can about breaker blocks, learn everything I can about fair value gaps, right? Learn everything I can about the volume imbalance. And over time, as you do that enough, you just start to build this understanding, right? A deeper understanding of price itself, how it's moving, why it's moving, where it's going to go. Pretty beautiful. Someone on Twitter said ICT is a buffet. Hey, that's a good one. Yeah, I like that. I mean, yeah, and especially, like, I feel bad almost for people that are just learning now, because it's kind of a double-edged sword, right? There's so much information he's released that it's almost like there's a gold mine. Like, he legitimately has released information that can free you for the rest of your life, right? You and your family, change your lives, change the path of everyone behind you. But on the flip side of that, there's so much information that you can easily get lost in the sauce. Right? Analysis paralysis. You can go down too many different holes and just get stuck, never kind of reaching your potential. So it's tough. And that's also why, right, Michael himself has said it. He could teach every single person, right, these concepts. They're still going to work because there's that human factor in it. Right? People are just going to not be able to interpret them the right way. Or even if they see them the right way, right, their emotions are going to get the best of them. They're going to revenge trade. They're not going to be confident enough to execute on it. So there's so much more that goes into it than just, right, learning the concepts themselves. But yeah, at this point, we're just talking, so I like it. We'll run through one last time, right, the morning. So we wanted to see this high here. That was our original kind of objective, right? Was this buy side. So we engineer a short-term low, we clear that, we create the breaker at 9:30 as we close above previous day high. This entry here, right, I'm using the, here. So we had this bearish fair value gap. First entry comes as we close above consequent encroachment. I use consequent encroachment to get long. stop underneath this candle here where our breaker was, right? So breaker blocks here, stop goes underneath that. Second entry comes on, right? There's a volume imbalance here, that 15-minute volume imbalance that we mentioned. I don't have it now, but that's exactly where this entry comes on. 15-minute volume imbalance, second entry, same stop, right? As we're playing around in here, I partial out this volume imbalance, end up getting stopped at break even. But once we do that, I'm stopped. I see that we still hold the breaker and we overtake that original 15-minute volume imbalance. I'll actually pull it up because we need to see that. Boom. Okay, so, right, we're not completely abandoning the idea just because we're stopped here. Instead, we notice, well, we still hold from the breaker and we immediately retake, right? That's that one candle's chance that I speak of. The very next candle retakes this discount here in the form of this volume imbalance. So as we trade into that again, boom, I go long. Right, that entry is nice. Stop loss under the swing point. We then create the fair value gap where I add the second position. And then as you saw, right, we get out right at the highs here. So high ticking it, end up getting stopped in profit. That's fine. At this point, we just watch this price kind of bullshits, right? We did end up reaching our buy side, which was nice. But now at this point, once we clear that buy side, aggressive displacement through the low, creating the breaker. As we displace through the low, we leave behind the 1 minute bearish fair value gap. And now we have sell side resting here that was left from the morning prior, or not prior, but just early in the morning. So now we go short using the breaker paired with the 1 minute fair value gap into sell side liquidity, which was also right the low of the 1 hour fair value gap here. So you really see how, right, this stuff all makes sense once you understand it. All logical areas. I mean, look at that. That's beautiful, okay? Low ticking it. Catching the absolute low of this run here. Only thing that would have made it sweeter was catching the swing high, but can't catch them all, right? We caught this swing low up into this swing high, this swing low as well. So overall in the day, we liked it. But yeah, we'll go ahead and leave it with that. Appreciate y'all sitting around this morning, hanging out here on YouTube. Let me see what we got tomorrow. Tomorrow most likely will just be a off day. Right, don't really do much on Fridays. Yeah, more than likely nothing tomorrow. We may have a private stream in the morning, but for those in the private mentorship, just watch out for the announcement for that. And if we do end up having one, I'll send out the announcement. But yeah, until next week, be safe, everybody. Hope you guys have a good weekend. And we will talk again on Monday. Yeah, Monday. I don't know if any of you guys know, actually, I was going to mention. Me and my homeboy Zeusy. Zeusy, right, he's also in the trading space, has his own group, the ones that know. I'll be actually presenting in there on Sunday. So if any of you guys are in there or interested in that, check out his shit. But I'll be kind of running through that. Running through my trading style, what it is I do, kind of my background to his students. So it should be cool. But yeah, we'll end it with that. Hope you guys enjoyed it. Yeah, he's sick. I like Zeusy. We go way back, so he's my boy for sure. Yeah, appreciate you guys. Final goodbye here. Have a good weekend. And we will talk. Wait. Sorry, Dylan. Hold up. Can you share more info in the Discord? Can you share more info? I guess I don't know what that means, Dylan. Sorry. Can you share more info the Discord? Maybe it was a typo. Can you share more info the Discord? Oh, for Zeusy, yeah. I think it's I actually don't know what his Discord is. Oh, it might be paid. Shit. Okay, I lied. Sorry. I don't know if it'll be free or not. But his Twitter, I'll link his Twitter. And if it's something, if you do want to take a look, you should have all his links there. Maybe. Okay. That's his Twitter. You can check him out. And then see if that's something that you'll be interested in. But alright, everybody. The classic 18 goodbyes later. Next free stream will be sometime next week, so keep an eye out for that. But for those in the private group, we will meet up again Monday morning. So until then, have a great weekend, everybody. Take care, and we will talk next week.